Yesterday was the biggest Bitcoin crash of the year so far. In today's video, I'm going to break down what happened, how this is reflected in on-chain stats, and then what the bright spots in the market are. Because despite everything that happened, there are still some projects that are building, growing, and posting bullish on-chain stats, even with the rest of the market tanking. Welcome back to Dynamo DeFi. My name is Patrick. And like always on this channel, nothing I say in this video is financial advice or a suggestion to invest in one asset or another. This is all to help you do your own research. And now let's get into the video. If we look at the Bitcoin price, we can see that it had quite the crash yesterday. It crashed from around $28,000 below $26,000 in 1 hour. And then it whipsawed back because there was good news about an Ethereum futures ETF. And then it's been fluctuating since and started to trend down again over the past few hours. Even as I'm making this video, it's approaching its lows from yesterday. And this hasn't just been relegated to Bitcoin. If we look at the top 100, then pretty much everything is down. There's a couple of coins that are up, but almost everything else is down by 5, 10, 15%. And over the past 7 days, many of them are down by even more, right? You have majors like Litecoin down by 22.6% in the past 7 days, Chainlink down by 17.8%. I mean, these are major coins, right? So that's a lot of market cap loss. Curiously, Bitcoin dominance has actually been decreasing. Oftentimes, as the market contracts, Bitcoin is the strongest, but that has not entirely been the case this time. It's contracted from 47.39% on Wednesday to 46.61% on Thursday. And the dominance of ETH and most other majors has also been decreasing. What has been increasing is the dominance of stablecoins, which makes sense, right? Because as the price of other things goes down, even if the supply of stablecoins stays the same, the dominance will go up. And then interestingly, the dominance of others has gone up. So dominance of other coins outside of the top 10 was 16.63% on Wednesday, jumped to 17.27% yesterday. So your mid caps, your low caps have actually increased their share of the total crypto market cap over the course of this crash. And that could be because they're lagging Bitcoin, right? It might take time for the crash in Bitcoin, which largely happened on centralized exchanges, to percolate through the on-chain ecosystem, or maybe it's a sign of a more fundamental shift in the market. We'll have to watch and see. I tend to think that they're lagging in terms of price action. Although long-term, I definitely think more things will move on-chain. Another interesting stat on a high level is that the total stablecoin market cap has still been decreasing. This is, we can see on DeFi Llama. It's just been pretty much on a steady downward trend ever since last June, and it had a major crash after Terra collapsed in May of last year, and then since then it's just been steadily decreasing. And this is definitely one of the major indicators that I'm watching for to see when we properly resume a bull market or turn bullish, because ideally you want to see the amount of stable coins in the system level off and start to increase, since that would show more liquidity coming into the system. Now that we've looked at exactly what was going on with price action, let's try to figure out why this crashed the way that it did. So a lot of people are blaming this on the fact that some news dropped that SpaceX wrote down its Bitcoin holdings by $373 million. And this report also said that they had sold some of their Bitcoin. Now, a lot of people misconstrued that as SpaceX selling all of their Bitcoin. Some people misinterpreted it as Tesla selling all of their Bitcoin. But SpaceX is, again, not a public company, so we don't have all the details of exactly how much they sold. But regardless, this does seem to, at a very minimum, have exacerbated the crash, if not caused it outright. But what caused it to do this insane crash, right, was not the SpaceX news. It was the fact that a lot of leverage had built up over the past few months, especially since the announcement about the BlackRock ETF, and over $1 billion was liquidated from the crypto market in 24 hours. So that's really what caused it to go down, right? The crash started, and then liquidation cascade just caused it to go down lower. Another reason why it's been going down is that stocks have been going down, right? S&P 500 has been trending down this whole month, and that is, yes, Bitcoin has not been as correlated this year as it has been with stocks in the past. However, when you look on a day-to-day, week-to-week basis, yes, if you're having stocks crashing, then barring some crypto-specific news, it's very reasonable to expect that crypto would also dip at that same time. And long term, I think if you look at the improvements in on and off ramps, the improvements in crypto UI, the improvements in smart contract security, as well as the large number of major companies that are starting to integrate crypto and Web3 solutions into their products, I think long term, Bitcoin and overall crypto market cap, they're going to decouple from equities, right? They're going to come into their own as their own asset class. However, again, on the micro level, on a day-to-day, week-to-week basis, it's not reasonable at this point to expect that if you have the S&P 500 having a major dip, that Bitcoin wouldn't also dip. And then just the insane amount of leverage in the system exacerbates it, and you get ridiculous candles like this one yesterday. Sweet. So that's what was happening overall with price. Let's talk about some on-chain stats. In terms of total TVL, that of course dipped as well. That dipped below $60 billion when you include total value locked for the first time. Well, it dipped below for a day in June, but before that, the first time it was below $60 billion was in March. And if you exclude liquid staking, which I generally include it for total level because that is DeFi, but if you exclude liquid staking, then total DeFi TVL is around $38 billion now, and it's almost down to its low following the FTX collapse. And prices are, of course, higher than they were then. So what this tells me is two things have happened. First off, people have pulled money from DeFi, or pulled money rather from traditional DeFi applications like CDPs, lending dexes. Second off, they've put a lot of that money into liquid staking. So some of that money is probably left, some of it's gone into liquid staking, but the DeFi ecosystem that we've known for the past 3 years is overall shedding liquidity, right? I mean, if you look at this, we're back pretty much to where we were in February of 2021 at this point. And so I think something that a lot of these dexes and lending platforms will have to contend with is that since liquid staking is almost universally considered to be safer, if they can't offer a comparable rate to native ETH staking, then they're going to have a tough time getting people to provide liquidity. And we will probably see some creative solutions for that, like we already have seen with MakerDAO introducing real world assets. Cool. Now let's look at some projects that have been doing well, right? Because there have been some positives. Out of protocols that have at least $50 million in TVL, then we can see that some of the top ones are STUSDT, which is a real world asset protocol on Tron. There's not a huge amount of transparency about where these assets are, so I would take these numbers with 5 or 10 grains of salt. However, it is up 39% in the past 7 days. Also, Thorchain. Thorchain is probably the biggest success story of the past week. With the rollout of their streaming swaps, they found a really strong product market fit, and Rune token has done well, and this has translated into 7-day TVL doing well. And also volume being processed by Thorchain is way up. And then these other ones that were up by smaller amounts. However, they are still up. A notable one is Libra Finance. This fits with the narrative of more money flowing into liquid staking tokens as they allow you to mint stablecoins against staked ETH. If we look at a chain level, then pretty much all the major chains are down, and a lot of this is going to be driven by price decreases. The notable exception, the one green in the sea of red up here, is Base. Base is up 98.07%. Not bad. $163.78 million, just ahead of Cardano, just behind DeFi Chain. I think Base is going to break into the top 10. It's a shoe-in, right? Crypto.com's chain is in the top 10 right now. I think Base is at least going to hit Kronos's level, and I think it's probably going to go much higher and start to approach the levels of Optimism, Arbitrum, and maybe beyond eventually. But it will take time. I think its growth will probably not be as exponential as it has been, barring some sort of incentive program. Another chain that's been up at least a little bit is Gnosis. So Gnosis has been rolling out a lot of interesting solutions related to off-ramps with Gnosis Pay, as well as some interesting solutions related to real-world assets. Another chain, again, that's been up a lot is Thorchain. Thorchain is just a big winner this week, and then there's a lot of other smaller chains here and there that have been successful, like Neutron, like Aster, like Hedera. Moving over to transactions on Artemis, then we can see Base has cooled down from where it was last week. It had its huge spike with the official launch, with friend tech, people claiming NFTs, and then it's cooled off, but it's still holding its own, right? Still holding nearly 400,000 transactions a day, whereas Optimism is around 560,000. Arbitrum is the big winner. Arbitrum had a huge spike in transactions yesterday, and if we dive into Artemis's trending contracts activity tracker, we can see that a lot of that was on an app called Bluefin, as well as Uniswap, and then for people swapping to and transferring stablecoins. So you have USDC, Circle, and Tether. Those are stablecoins. If we look at DEX volume, then we can see DEX volume was actually up, as often happens during times of extreme market volatility. However, one thing that jumped out to me here is, if we're looking at smaller protocols, is that Maverick protocol has really been holding its own, right? It's doing volume of $180 million over the past 24 hours compared to Curve Finance doing $315 million. And I think given some of the issues that have occurred with Curve, I still think Curve is a pillar of DeFi, but I think that's opened up the room for some other players like Maverick to steal some of that volume. And Maverick has really done a good job of sourcing liquidity for liquid staking tokens, for example. And so I think that they have the potential to be a major beneficiary of the rise of liquid staking tokens and the move towards DeFi TVL in liquid staking. Looking at DEX volume by chain, then we can see that Arbitrum, as would be expected from this jump in transactions, has been performing very well in terms of volume, ahead of Binance Smart Chain at the moment. And then another big winner is Base. Base, over the past 24 hours and over the past 7 days, had more volume than zkSync Era, making it the third largest Ethereum rollup by DEX volume. Final stat that we want to look at is fees and revenue. Most of the protocols that didn't top fees and revenue over the past 24 hours and 7 days were the usual suspects: Ethereum, Uniswap, Lido. One that jumped back into the top rankings is GMX, and that is, of course, because during periods of market volatility, people are getting liquidated, people are trading more, and that leads to an increase in GMX fees. Now, another notable performer here is that if we look at fees over the past 7 days, then Friend Tech, which is a social finance app on Base, has been holding its own and is ranked 12 over the past 7 days. And those are your on-chain updates for the week ending August 18th, 2023. For written weekly updates on the most important trends and stats in crypto, be sure to subscribe to my weekly newsletter at dynamodefi.substack.com. And have a great weekend.